Alright, gang, it's your boy Nature, aka Nature. Alright, gang. You already know what time it is. Back for another video. Alright, so in this video, we gonna be talking about cause we already went through all the basics. As far as like, you need to know candlesticks, the patterns. Like we went over all the single candlestick patterns. We went over all the double candlestick patterns. We went over all the triple stick candle patterns. So which is very important. All the single candlestick patterns are spinning tops, dojis, marbles, inverted hammers, hanging mans, shooting stars. Doubles will be bullish and bearing, engulfing, and tweezer tops and tweezer bottoms. And for triples, we have morning and evening stars, 3 black crows, and 3 white soldiers. The insides up, 3 insides up, and 3 insides down. And the head and shoulder and inverted head and shoulder. So we went over in the last video. You can see that we went over all the Japanese candlesticks. Just check the videos out. And so for today, now that we understand Japanese candlesticks, which is the basics, understanding, doji, spinning top, marbles, bullish, berry, engulfing. Now we understand the basics of trading. We can go into a more advanced step. We're gonna go more advanced now, and give y'all, more and more advanced information on how I actually make my trades and stuff like that. I'm gonna start showing y'all my trades and how much money I make off of each trade and all that. So that's the next step. Now that y'all know basically all the basics, I'm gonna start showing y'all my pairs and what times and stuff to trade and all that. Today though, we still need to understand the basics, which is an uptrend. You need to know what an uptrend is. You need to know what a downtrend is. So today we're gonna go over uptrend. It's a trend that's going up, but there's going to definition, and dive in a little bit. So let's see. Got some images right here. What is an uptrend? That's the image of an uptrend. Okay, so an uptrend consists of higher highs and higher lows. As you can see right here, higher highs. Let's click on one of these. This is an uptrend. Click on all few of them actually. So, alright, so an uptrend must make a higher high, boom, and then gotta make a higher low. And then it has to make a higher high. So that high, this higher high is higher than that higher high. Alright, so this is the low, right? And then this is the higher high. Then this higher than this, and then it went back to a higher low, because this higher low is higher than this low. So then it goes up, right? And then this higher high is higher than this higher low. Then it goes back down and makes another higher low, because this higher low is higher than that higher low. So it's an uptrend consists of higher highs and higher lows. So that's what it looks like. Same thing here. Show you some more pictures before we actually dive in. And higher high, higher high, higher high, higher low, higher low, higher low. Alright, so this is what an uptrend looks like. Again, here's another example of an uptrend. Higher highs, boom, higher lows. The high, the lows right there, and then you can see at the top with the arrows going down. Those would be considered the higher highs. You say down arrows indicate higher highs, up arrows indicate higher lows. Alright, so now we understand what a higher high looks like. An uptrend looks like. Let's actually read about it. So an uptrend describes the price momentum of a financial asset when the overall direction is upward. It is an uptrend. Each successful peak in drought is higher than the one found. And the uptrend, therefore, is composed of higher swing lows and higher swing highs. Alright, so let's just read the definition of it on Expedia, Investopedia. So what is an uptrend? Uptrend is a described price momentum financial asset with overall direction is upward. Its overall direction is upward. It's an uptrend. Each successive peak is a drought is higher than the one found earlier in the trend. The uptrend is therefore composed of higher swing lows and higher swing highs. As low as the price is making these higher swing lows and higher swing highs, the uptrend is considered intact. Some markets pretend these traders usually various strategies to take advantage of the tendency for price to make higher highs and higher lows. And some people only trade uptrends, some people only trade downtrends. I trade both. I trade uptrends and downtrends. But all right. So a higher high. So an uptrend will make higher highs and higher lows. So I'm gonna teach you how to trade uptrends and downtrends. So uptrends may be contrast with downtrends. Okay. Um, Uptrend are so meaning like it's an uptrend overall, but the market's just not going to go up. It's going to go down and then up. It's going to go up and down, up and down. So it's not going to just continue to go straight all the way up. Like no, it might go up for the first week or two, or for the first couple of days, and the overall for the month it might be going up. But it just can't go all the way up because it takes a month for it to go all the way back up. So that's why I say an uptrend may contrast with a downtrend, because that some people are like, oh, it's going down. No, overall you have to look at the trend. So we look on a daily and a weekly to get that actually in a 4 hour too. I'm gonna show y'all that. So let's just go back into the keyways, takeaways right here. So uptrends are characteristics by higher peaks, and higher. Uptrends are characteristic by higher highs and higher lows, peaks and droughts over time, and implies in bullish sentiment among investors. So a change in trends is fueled by a change in supplies of stocks. Investors want to buy. So a trend is for buyers. The downtrend is for sellers. So compared with supplies of available shares in the market, uptrends are often consensual with the changes in the factors, whether they're economic or specifically associated with the company business model. So understanding uptrends, an uptrend provides investors with opportunities to profit from rising asset prices. Selling an asset once it has failed to create a higher peak in a drought is one of the most efficient ways to avoid large losses that can result from a change in trend. So technical traders utilize trend lines, and I'll show you what a trend line is. A trend line is it keeps you like, so when when the reversal is going to happen, because you have a trend line. So to identify a trend line, it's an uptrend. It has to be on a trend to even draw a trend line. It has to be trending up. It can't be consolidating, or it's not going to be a trend line. So it has to be trending. So for the uptrend, you're going to draw a trend line up from the lowest point to the highest point. And I'm gonna show y'all that. So it's a swing low to swing high. So uptrend is spot possible too. So the trend line is drawn along the rising from swing low, which may be help show where the future swing low may form. So it's from a swing low to swing high. From a downtrend, it'll be from a swing high to swing low. Alright, so moving average are also utilized by some technical traders. So we're gonna talk about moving average too, to analyze uptrends. So when the price is above the moving average, the trend is considered up. But when the price drops below the moving average, it means that the price is now trading below the average price over a given period, and therefore there's no longer being an uptrend. So with these tools may be helpful in visualizing seeing the uptrend. Yeah, I don't really use a lot of indicators. I really use this the moving average. So while these tools may be helpful in visually seeing the uptrend, ultimately the price should be making higher swing highs and higher swing lows to confirm that an uptrend is present. Due higher swing highs and lows, it means that a downtrend could be underway. The assets in ranging or price action is choppy. So when you see it choppy, or price action is choppy and it's ranging, it's going sideways, not really doing nothing, the trend direction is hard to determine. So you have to actually see the trend going upwards. So if the uptrend trader may step aside and wait for them to see a clear uptrend. So you want to make sure you see a clear uptrend. So how do you trade uptrends? There are many techniques for analyzing and trading uptrends. Looking only at price action is one way, while using tools like trend lines and technical indicators are another. Two common price action confirmed or invalidated with additional inputs from technical tools and indicators. I don't really use a lot of technical tools or indicators. Goes back during an uptrend. So price is going to always pull back. It's not going to just go up. It might just go up for like the first few days, and it's going to pull back the next few days, and then ultimately go back up towards the uptrend. So you have to, understand these technical tools and understand how they work, so you can buy, and place the right, orders. So when you price and attempting to make a new swing high, even if the price rises, it will oscillate up and down. The move lower are called pullbacks. If a trader or investor believes the price will continue higher after the pullback, they can buy during the pullback and profit from the ensuring price rise or time consuming. Since there is uncertainty as whether the price will rise again and when, these traders may prefer to wait for the price to be definitely rising again. This means that they may end up buying near the prior swing high and when the asset pushes into a new high territory. Both strategies require specific entry criteria to enter a trade. The trader buying during a pullback may only if the price is near an anticipated support, like a rising trend line, moving average, or Fibonacci retracement. So level. So I'm gonna teach you how to do that too. Fibonacci retracement level. But it has to be near a support level, and then it'll be going up to an uptrend. So they may also wait for selling on a pullback to slow and for the price to start turning up before buying. So tradings that buy near prior highs, that's buying near the prior highs. You want to trade and buy near the prior lows because they want to see the price is moving higher again. So you don't want to buy when it's high. You don't want to buy when it's high. You buy when it's low. So may decide to only enter once the price moves above a short-term resistance level. So I'm teaching you how to draw resistance levels and support levels on your charts too, so don't worry about that. So just to be consolidating on a chart pattern, ultimately they may wait for the price to move a new high on a big volume jump or for a technical indicator to flash a buy signal. So this is the risk. The risk is you need to put a stop loss above. If it's going up, your stop loss needs to be on a swing low. It needs to be on the lowest point because it's going to swing low to swing high because it's going upward. So it swings low and then it swings high. So since the trader is expecting the price to move higher, the best way to do this would be to wait to see confirmation, see some type of candlesticks, some type of indicator, some type of technical indicator, some type of bullish or trend line, or you gotta look at the moving average. You can also look at the moving averages to also determine. It's a lot of technical indicators that you can look at. Candlestick, bullish candlesticks, bullish engulfing candlesticks, moving average, trend line. Use all these things. Use everything you can to analyze this uptrend. Analyze the uptrend and see if it's going up, so you can trade up or not. So we use all these things, which I already explained, and so make sure y'all check those videos out. So basically, this is an uptrend. My next video, we'll be talking about how to make what is a downtrend. Alright, so this is what an uptrend is. You already know what time it is. I got y'all more content on the way. So, gang.